Hey, what's up, everybody? Welcome to Huobi Live Market Chat. I'm Johnny. I'm your host today, and today we have a special guest. We have Ryan here. Ryan, hey,
Hi everyone.
he's new here. Today, me and Ryan will cover some interesting topics. First of all, we'll talk about the Ethereum merge, post-merge update. We'll try to discover and explain why market reacted in a bearish way right after the Ethereum merge. And after that, we'll go to the FOMC meeting, which will happen tonight, 6 hours later. And then after that, we will also talk about the market liquidity model, which I in the previous episodes I explained the model about RRP, and also today we have a new index in there, which is the TIP, which I will also explain later. And then lastly, we'll cover some crypto news, MicroStrategy, purchase additional Bitcoin. We'll talk about it later. And last of and in the end, we'll have the candy drop section. So make sure you stay tuned and also have your Huobi app opened. So let's get started without further ado. So Ryan, would you like to introduce yourself? Because I think the audience would like to know more about you, and they already know me very well. I've been hosting weekly market chat for 3 months already. Yeah.
Right. So hey everyone. This is my first time here on Hobby live stream. So be nice, and it's a pleasure to have this session today with Johnny. It's great to be here.
Yeah.
So a short intro for my background will be I'm currently based in Singapore right now, and I generally cover like new project filtering and also evaluations for our exchange. So basically, we look at many projects every day from different sectors, including like your DeFi, GameFi, and also layer one, layer two projects. So that's basically for me.
Thank you, Ryan. Thank you.
Yeah.
Nice to have you here. Enjoy the conversation. So without further ado, let's get started. Let's talk about the post Ethereum merge update, which is not very much expected because most of us expected that we were bullish right before the Ethereum merge, and we were expecting price will pump and go up to maybe two K. And then however it turned out that it did not happen that way, and is worth worth reflecting on, why the market reacted that way. And hopefully today we'll have an answer, because I think it really correlates to the liquidity model, and ultimately it comes down to being dragged down by the macroeconomic condition. And yeah, we'll cover it later. But first of all, there are some things that I think we have to understand about the Ethereum merge. So in the last episode, me and Dave, we explained, no, me and Dave explained that actually the Ethereum merge is a little bit overhyped, I would say, because when it comes to the merge, it actually means that it is a stepping stone to more upgrades, which is not the upgrade that will make the network more efficient, or making the gas fee cheaper. And it is not happening that way. And also, well, we had I would say a very big expectation that if Ethereum will become deflationary, which means that the supply is going to decrease, and then we're expecting price to increase relative to the decrease in supply. However, it's not very deflationary. I will show you later. I'll show later in the ultrasound money. And yeah, so basically, the most practical thing about the Ethereum update is that it shifted from the consensus of proof of work to proof of stake, which will decrease its energy consumption. And now now the energy consumption, the biggest energy consumption goes to Bitcoin, but not Ethereum, right? Because it shifted from proof of work to proof of stake. So I would like to show you something. Yeah, let's go to the chart and let's see how things develop on the merge day, right? September 13, right? Sorry, yeah, 15. So about here, it's here, right? September 15th. Yeah, somewhere here. And then right after the merge, the price just get dragged down, and it's not very it's not it's not very bullish ultimately. What do you think about it, Ryan? Did you buy into
Definitely.
some ETH and
I didn't buy it myself, but I'm not sure whether you did you, Johnny. But actually,
yeah,
I remember actually on this day itself, I remember watching the Ethereum founders live stream in itself with
yeah,
other, I think, 300,000 other viewers also while we wait for the official Panda merge.
yeah.
So I think the merge is actually the start of the whole roadmap. So it's not the end of everything. So we still have another, I would say, a few more narratives to go. So next in line will be the search, which is the important one for scaling. It's more to for the sharding, and then we will have verge, purge, and also splurge. I mean, hearing all this, it's increasing my urge to stack more ETH actually.
Yeah, I think you got a point, right? Because it's not the end of the world, right? Because
Yeah, yeah.
yeah, we should think like this. Ethereum actually, after the merge, it finally transited from proof of work to proof of stake, which is a huge achievement. Because in proof of stake we have better energy efficiency, and also probably it sets up for the upgrades that will take place later, which will then make the network faster and also cheaper. Because this is not the update that we expect to bring down the gas fee and also to fasten the network, right?
Yeah, correct. Correct.
Yeah.
Definitely, Johnny. But this is actually quite a big thing as well because the Ethereum Foundation actually and many developers itself has they have basically prepared quite a long time for this and I think a year plus to actually reach where we are right now. And if you ask whether this trend was overhyped, I think definitely, like every other crypto projects, I think a lot of things are overhyped. And in crypto itself, I believe we are very used to this type of so-called buy the rumor, sell the news kind of events. A definite example will be when El Salvador gave out the rumor that they are changing like BTC to their native currency, right? So I think before this merge, I think there are many threads on like Twitter on how to profit from this merge actually flooded the crypto Twitter even a few weeks before the merge happened. So I think the hype started from there.
Yeah, and also I think that um I would like to see the hype. You know what I mean? Because I know that crypto is not dead. As I you know when I just scroll through Twitter and I see a lot of active crypto users getting excited about ETH, and I'm actually a little bit happy about that because I know we after entering in a I would say a very long bearish market bearish phrase, and then it's still a good thing to see that people are still getting involved about the Ethereum upgrade thing, right? Because still remember that back in June and also July. I remember it's July, right? When Vitalik announced that we are going to have an upgrade soon in September, right? The news came out in June, right? Or July. I forgot about it.
Yeah, around that time, yeah.
Yeah, yeah, yeah. Yeah. And then you see the hype just brought Ethereum from around 1,000 to 2K. That's a double, right? That's a double.
I mean,
Yeah.
if we are not in a bear market right now, I think we will see a lot more than this.
Of course, yeah. We'll see tripling price, right?
Yeah, man.
And yeah, and also for the Ethereum Classic, absolutely, being influenced by the hype, and it's here. The price of Ethereum Classic went up like I'll say it's like, oh, it's triple, right? Yeah, yeah, 200%. So another interesting thing to see, the crypto is not dead because we could still rally from the bottom to here, right? If and yeah. But
Right.
some things I'm actually sad to see about is the Ethereum proof of work, the hard fork thing, because when it came
Right.
out, yeah, when it came out, the Ethereum proof of work, it shot up, right? It shot up, and then it is very, I would say it looks very similar to some other micro cap altcoins. We'll see on CoinGecko or CoinMarketCap if we just discover some recently added microcap coin or coins, and then we'll see some pattern like this. Pump and dump, right?
I
Yeah,
think if you scroll through, like you said, I think a lot of small caps they look exactly like this.
yeah,
I mean,
yeah,
one of the back to why the market tumbled down. I think one of the most common one, the reasons why it tumbled down was that the one of the strategies for the merge to profit from the merge was to buy spot or well hedge with either options or short contracts, right? To
yeah,
receive like this so-called proof of work, which we you will explain later. So for example, this rumored like Ethereum proof of work tokens, right? So that's why this has led to like higher open interest and also funding rates were largely skewed towards the negative side before this. I mean, now it has gone back to a negative level already. But the tumble was a portion of it was because of right before the merge event, some analytic firms such as like Nansen and Glassnode, they also have mentioned that they saw like huge influx of Ethereum into like centralized exchanges. I'm not sure if you caught that news as well. So the amount was and the volume was quite huge, I would say. It's almost 1 billion worth 1 billion US dollars. And through that, I think that's why we saw like Ethereum price started to tumble as investors unwind their positions after that, after they have gotten like the snapshot.
yeah,
Free
right,
money.
right.
Who doesn't want free money, right?
Yeah, 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 right. Sell the news event, definitely. Because I spotted the news that came out in August. I think it's August. A large influx of Ethereum came into exchanges, and that's actually a red flag, right? For just before the merge, probably they think that the price is actually a better place to take profit, right? And therefore, maybe who knows, right? Maybe they don't dump all of their ETH. It's just taking profits and buy back lower, right? Some strategy actually works like that, and um and yeah, and Arthur Hayes from BitMEX actually said that the merge could actually be a still the news event, and he also predicted there could be a possible 20% correction after the fact, and I think we are now having a right 20%. Do we have 20% here? Here. Oh yeah, really 20%. So should I believe Arthur, right? Yeah, should I believe
That's
Arthur?
a bit questionable
Questionable,
because
yeah.
yeah, there is two sides, I think.
Yeah, too much fun, yeah. And I'll also like to show you guys the ultrasound money, which gives data information about the Ethereum proof of stake right after since the merge, and we could see that it's actually not very deflationary because the supply since merge we are now having a 0.21% increase that's totaling about 4,268 ETH. And that's not very deflationary, which I think also contributed to the dump, right? Because people expected it to be deflationary. The narrative, I would say, the narrative before the merge, trending on Twitter, trending on the internet, other social media, all people are saying that it's going inflationary and we are having less supply and then price should go up, right? But however, the merge is here and then the fact is not like that. It's actually not deflationary. Actually, if we
Yeah.
compare it to proof of work, and we can see that uh, you can actually visit ultrasound money and you can simulate proof of work, and it actually shows that if we did a merge, and then the supply would be 78,000. And I would say it's not deflationary right now, but it definitely has, issued less supply than it had merged before, right? And so I would say it's still, in relative terms, deflationary when we compare it to, before the merge. What do you think about it, Brian?
Yeah, yeah, Johnny. I think that even though that it's not really deflationary right now, but actually if you go back to the previous table, the we actually went in deflationary a short moment after the merge. I think the
Oh yeah, yeah, yeah.
maximum we
You're right.
were deducting was about 250 ETH at that moment, but it was
Yeah,
quite short-lived actually because there is still this lack of demand for on-chain activities right now during the bear market. I think if we can see a revival in the NFT trend, we might go into we might go into the deflationary that everyone wants. But I mean, I would like to look at the good side, whereby even though that it's not really deflationary right now, I think it's still a massive bullish indicator for Ethereum because if you compare it pre-merge, I think we have reduced the issuance by almost 90%, and the inflation right now is even lesser than Bitcoin, right? As you can see from the table,
yeah,
the
yeah. You're right.
inflation is only 0.21%, means that we need to the selling pressure, I would say, the monthly selling pressure is largely has been reduced already from the pre-merge. So I would say it's still a good transition.
Yeah, definitely. I think it's still a good transition, because before we had, 3%, 3.8% inflation rate, and then now we're getting 0.21. Given that we are in a bearish market, and also we don't have a lot of on-chain activities going on, as you mentioned, I definitely agree to this point. And yeah, hopefully we'll see, the revival of NFTs, and then probably,
I
yeah,
mean, you never know, right? Because
yeah,
I mean, OpenSea just announced today that they will be launching on Arbitrum. So maybe some small brains NFT will bring us up.
yeah, hopefully. And also, we are seeing some burn information. Yeah, we have already burned time frames 1 day. We have already burned 1,000 ETH. And if we look at all time, let's look at 7 days, 7 days, 6,700 and something. Yeah, it's actually kind of interesting. Ultrasound money. If you're
and
interested
and
in
just
seeing how ETH goes on the yeah, yeah,
And
Ryan.
just to add to this conversation, I think other than the massive reduction in Ethereum issuance, I think another very good point of this Ethereum merge was the reduction in energy. Means it's more to ESG and more greener energy. So it's amazing to know that the merge has led to such a reduction in energy, almost 99% reduction. And I think Vitalik Buterin previously actually tweeted that we have actually helped reduce global electricity reduction by almost 0.2%. So I think that's another big leap as well, in addition to the reduction in issuance.
Yeah, definitely. Uh, we should treat it as an huge achievement, just like what Vitalik said. But some people didn't think like this because they are a little bit worried about the centralization of ETH when it merged, right? Because um, I would like to show you an article. Just a minute. Not Powell. We talk about Powell later.
Powell can wait.
Just a minute. Yeah, Powell. Yeah, here. So I would like to show you an article, on Coindesk. They're saying that the two platform they mean Lido and also Coinbase because they are having like over 40% of network blocks. They have the most validators, and since it shifted from proof of work to proof of stake, and then the power decentralization goes to the validators, and we are now some people, I would say some people are actually worried about the possibility, the possibility of the theory of 51% attack would be possible if it becomes too centralized for Ethereum proof of stake. And yeah, it's quite I would say worth studying. Uh, but I don't think some people are a little bit skeptical because they know that Coinbase is being regulated, and people say that Coinbase are going to comply to the rules and also laws of the SEC. And if someday FCC tells Coinbase that, we don't want you to process the transaction of certain address or certain wallet, and then you should do this or you should do that, and then ultimately is we don't want to see so much centralization of transaction, and that's another thing that we have to be a little bit worried about. What do you think about this, Ryan?
Yeah, Johnny, I think I'm not sure if you agree with me, but I think regulation can be your friend or your enemy, right? And for I think this article has stated that after the merge, about I think 40, almost more than 40% of the blocks was done by Lido and Coinbase. So
Yeah,
as you said, questions about the decentralization of Ethereum as a whole. I think this has become a problem as well since SEC has been these few days has been aiming a lot of regulation towards Ethereum and the POS system because SEC can after the merge, SEC can argue that majority of ETH is operating in US and thus have jurisdiction over it. So I think this will become more of a flood to us as well.
you're right. Actually, regulations, sometimes it has limitations to, the development of crypto, but it also ensures safety and also, uh, you know, better safety, just better safety, because you don't want your maybe your wallet get hacked, and then the hacker spending your savings very happily somewhere else. This is something that regulation can help tackle, and I kind of agree with you. Legislation, regulation, it's actually, I would say, it has goods and bads, just point of view. And it's a little bit fun as well because two platforms add over 40% of network blocks. So individually, I would say maybe Coinbase or Lido. Uh, if we treat them individually, and then Lido just have 20 something percent and Coinbase 20 something percent, half half. So I don't think you know there's not one entity owning more than 50% of the total network's blocks and validators. So right now, just some worries, but maybe we are too worried about it. Right.
Sure, we will get through it.
Yeah. Yeah. Yes. Right. And also, I would like to show you an interesting tweet from this guy who criticized Ethereum proof of work because this guy thought that uh, ultimately the focus, just in favor of the miners because miners need to earn money, and that's what he thinks about. And then he also thinks that in the hard fork, in the fork Ethereum proof of work, there are not a real developer to the project, and even I think that they they changed the chain ID, just hours before the merge, before the fork, right? And not very. Some people would think that the project is not very solid because so many tentative changes, and also not a real, not many solid real developer background, and then just not good looking. And yeah, it's some critics over there, and also uh, and and also they say this guy said that they had plenty of time to prepare a block explorer, and then and something like that, and it doesn't seem that they have anything planned it. And the critics many attacked Ethereum proof of work as very, I would say, very rush and not very dedicated to provide value for maintaining the chain's utility. Just some are what other people think about it. Some people support it, and some people just criticized and attacked the fork, and you know, who knows, right? Yeah.
I mean,
So
I agree with.
yeah, yeah. All right.
I
Feel
mean,
free. Yeah.
I agree with Igor. Like, basically the chart, Ethereum proof of work chart, speaks for itself. So the entire thing felt like a meme, you know. When it was released, it felt kind of delayed. When with nobody being able to test the blockchain even before the release, and like you said, I mean, even after the release, they failed to prepare some key software features on time, which made like a lot of users struggling to access the new chain. I mean, the chain itself is not workable even in a few hours. Uh, I think the most funny thing that happened was that even the founder of Ethereum Proof of Work, the chain, the founder Chandler Guo, I think he posted a tweet that he shorted the coin itself and posted it on Twitter. I mean that's kind of funny, man, to me.
Yeah, it's kind of funny, right? It's kind of funny. So yeah. Um. Yeah, I lost 90% of momentum just on launch. So the founder must have earned a lot of money from shorting its own project, right?
He posted it himself, so
Yeah. So yeah, let's move on to the analysis, the liquidity analysis. So apart from just going through the market sentiment and also the basic things about the Ethereum merge, went through proof of work, proof of stake, and also the reasons why Ethereum dumped. I will also add to the point. I would also like to add one point about the why the Ethereum price dumped. I think it's actually, let's look at the liquidity model here. So I would like to show you this chart. This chart, I actually compiled a bunch of data here, so I would like to explain one by one. We have BTC here, which is in blue line. We have inverted RRP, which I will explain later. RRP is reverse repo, a tool used by Fed to add or remove liquidity from the market, which will affect equities and also risky assets prices. And then we also have SPX, which is in black color, and then IXIC. IXIC is actually Nasdaq, the index for Nasdaq, and it's actually in purple color. And then we have ETH. The main thing we want to focus is the ETH, green color, right? And then also the tip. I'll explain what tip is later. So to first of all, yeah, just a quick review about what RP is in case you guys didn't watch the previous episodes. And actually, RP is the full name of RP is reverse repurchasement, repurchase agreement. So it's RP or reverse repo. People would say it's actually a tool used by the Federal Reserve to buy back liquidity from the market or to in simple terms just to suck out liquidity from the market. Okay, right? So if reverse repo increase, just like this chart, if reverse repo increase, and then liquidity is being sucked out from the market. If RP decrease, and then liquidity is being injected back in the market because it's actually an agreement entered by the Fed and also the eligible counterparty. It could be money market funds or some other institutions who the Fed agrees to buy back the security later and then to sell the security to the eligible counterparty. So that you can think that if I enter an agreement, RP agreement with Ryan, and then I would sell maybe a security worth of 1 million to Ryan, and then I agree to buy back later. So when I buy back later, and then liquidity is being injected into Ryan, right? If I sell the security to Ryan, and then I take money from Ryan, and that's how RP works. And you can also visit the go to Huobi research and also visit the article I wrote, which explain how RP affects Bitcoin's prices. And yeah, just get back to this chart here. It's really interesting to see that Ethereum, the green line, actually correlates very just has a very high correlation to SPX and Nasdaq, and I would say it's recently showing some correlation with tip too. So let me explain what tip is. You can actually here tip is actually iShares tip spawn ETF as an ETF. So it tracks the performance of index composed of inflation protected US Treasury bonds. So in simple terms, it's actually I would say people would invest tip to protect us against intermediate term inflation, and also it tracks the performance and investment results of this thing. And then the result is that I found this kind of uh, co correlates to SPX and also Nasdaq and also Ethereum, since Ethereum is very correlated to Nasdaq and SPX. And the major event I would like to spot here is on the 9th of March, right? We could see here when inverted RP, I inverted RP here. So I use 1 over reverse repo, the total amount of reverse repo, so that it does not show a negative correlation, but a positive correlation. So we better just study the chart for more convenience, and also just better looking. So on in March, we have a spike in reverse repo, inverted reverse repo, and also tip. And then 2 weeks later, Nasdaq, IXIC, and SPX, and also ETH, and also Bitcoin, they topped right there up 2 weeks later, right? So this is actually I would say a leading signal generated from these two indexes. And later on, here in May, late May, tip show a spike here, and then Nasdaq, ETH, Nasdaq and SPX also showed a relief rally here. And then in July, late July, August, and in early August, the tip topped, right? And then after that, SPX, IXIC, and also ETH, they topped too, and also Bitcoin. Could you? I think it's easy to spot the correlation here, right? And let me just uh, get you a very close just a minute. I'm showing my code here. So a very close lookup here. Just a minute here. Yeah. So zooming in, so we better can you just have a closer look at the market. So Ryan, what do you think about this behavior? I think it's not hard to agree that tip is is leading SPX and also Nasdaq, and even I could say ETH in 2 weeks time frame.
I mean, I agree with you, Johnny.
Yeah,
I'm impressed on your research level on this. You did a lot of work, I can see. And I would totally agree with you, and you explained it actually perfectly. I feel that RP is actually quite an accurate depiction of the entire liquidity in the market. So it can work sort of like a leading indicator for the markets. And since that the correlation right now between S&P, Nasdaq, and also the crypto market is actually quite high, the correlation since last year, I think. So, I mean, it feels like just a leveraged version of the markets like BTC and Ethereum, right? So, I
yeah.
mean,
I would like to add one point, right, Ryan? Because we are actually seeing a weaker correlation of reverse repo with Ethereum, Nasdaq, and SPX. They are actually being decorrelated in recent months. However, reverse repo maintain a very strong correlation to Bitcoin, as we can see from this chart. You know,
Right, right.
yeah,
I mean, I
Ethereum
will
and Nasdaq.
definitely,
Yeah, 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 yeah,
I mean, I will definitely keep this on top of one of my watch lists right now.
yeah, yeah, right, yeah, yeah. So it's actually interesting to observe this correlation because we can better position ourselves for incoming market volatility, especially we have FOMC meeting tonight. I'm not trying to predict something here. I'm just trying to express my opinion on financial advice though, because tip, it's just very bearish for tip. And I think Ethereum, Nasdaq, and also ICE should follow. That's what based on the historical correlation. I'm just reading charts and things could turn out in an opposite way and who knows, right? But I'm just guessing a higher probability that equities are going to show some bearish development in the coming days or even weeks. And yeah, also, I just added one point that, the inverted RP actually decorrelated with ETH, Nasdaq, and also SPX. You could see the dead cat bounce here. I would say dead cat bounce because it's just a fake pump, right? And then it retrace back very quickly and sharply. Uh, we could see that RP did not increase very much, or we could just visit the FLED here and just watch this thing. Actually, you can go to FLED. The data is open here. Is available for your study. Is actually reverse repo, and then just go for the daily overnight reverse repo, reverse with purchasement agree reverse with purchase agreement, and then we could see that since July since June it stayed relatively flat, and we are actually also seeing a very flat development, a flat price development of Bitcoin, right? Since June to September, if we take an average, so maybe actually I would say price trading definitely in a trading range, right? Between 17 something K to 25 K in a trading range. So the mid range is like 21K. So yeah, interesting thing to notice here. So yeah, um, that's yeah, we just the liquidity model is basically reflecting that potential bearish development coming ahead. Yeah, that's what I think about.
Yeah, it's it's very near, Johnny. It's very near. It's actually around 5 hours later.
5 hours later, yeah, we're definitely seeing a lot of volatility coming in, right? And the Fed FOMC meeting tonight, 5 hours later, right? 5 hours later, yeah. Ryan just sent me this picture, market expectation, 80, 82%, 82%. It's a poll, Ryan. It's a poll, right?
Yeah, yeah, correct.
Yeah, it's
And
a poll.
actually, this 82% was the same. The important thing was the one beside of them. The 18% wasn't there before the Jackson Hole meeting, and also the 8.3% print on the CPI that we got. So that one is actually the worrying one, not the 82%.
You're right. So you mean that things could go in the opposite of our expectation, right? If they release 100 basis point tonight, and then we are going to get wrecked, right?
Yeah, correct. So to explain to the listeners in the stream, so actually 82% expectation is that tonight the Fed will actually increase 75 basis points on the Federal Reserve. and the 18% is actually the expectation that they will rise 100 basis points. So if we look at other indicators like the 2 year and 10 years treasury yield and also the DXY today, they actually all broke the previous all-time highs already. And this indicates that actually there are people in the market that is pricing in the 100% basis the basis rate increase. So there's already some form of hedge for the unexpected to happen. But also considering that uh, currently in this period of time, there's a midterm that actually is going go on US. Uh, for myself, I mean, it's just a prediction. I would be skewed more to a 75 basis point increase. What do you think, John?
Um, since the fact with their first mission is to bring inflation down, right? Because I don't know if they will go more hawkish or try to go easy. I don't really know, but I hope I hope the Fed does 75 basis point because I wish we could have some relief rally tonight so people could be happy. We could be happy, right?
Yes, it's
But
all
yeah,
our hope and dreams depends on this bar.
yeah, or at least we all know the economy is going down bad. At least give us a relief rally so we could exit our position.
I mean, would you think that it will repeat itself like previously the market if let's say tonight itself they actually increased it by 75 basis points. As we can see from the previous times that they have released the interest rates, the market actually pumped right after the release,
Yeah, yeah,
shortly
yeah.
after, and but then puke it all back up right after it. So do you think it will happen again, like previous?
I think it comes down to the point that we already we already priced in, and already processed the 75 basis point expectation, right? We already priced that in, and then if we price that in, if the result tonight is 75 basis point, and then probably we're going to have a relief rally. That's my opinion, but not a financial advice. So, however, if it comes out 100 basis point, and then we are going to get wrecked. The point is that, yeah, the point is that we cannot predict future. We can only know what Fed is going to do and just position ourselves at a bad place. So I'm getting very I'm staying tuned to the results tonight. If it says 75 basis point and then I ape in, if it says 100 basis point and then I go short, that's not strategy.
Totally agree with you.
Yeah, that's not strategy. Yeah. A little bit worried because I would like to show you some article here. Just some analysts say that they're expecting most analysts expecting as a 75% basis point, just like the poll. I don't know. The picture you sent me, the poll is from who did the poll actually? Analysts? I think it's analysts, right?
Yeah, they just compiled their opinion.
All right. So yeah, according to the poll, 75 basis point, market expectation, and then let's hope so, because um, some analysts said 75 basis point move is already very damn hawkish, hawkish. The third one in the world, and he's got a point, right? Because it's been a long time since we had this high interest rate, right? If they're going to increase the Fed funds rate, and then you know market is not going to look good in the future. A lot of people, are paying just just imagine a lot of people are mortgage and then they're going to, spend more money on interest, and then some people are on loan and then fewer activities, fewer consumption, and then that's not a good thing. It's already very hawkish, and then I hope this, ends soon. Yeah,
Yeah, Johnny, the market is looking very bleak now.
yeah, very bleak now. So I just I just opened the DXY chart and then it just made a high, right?
Just slightly.
It's trying to it's trying to make a high. That's not good, I would say. That's not good. As market, fermenting tonight's meeting, some insiders already pumping this guy, already ape in here. It's making a high, right?
It's worrying, Johnny. It's worrying.
it's yeah, yeah, it did make a high here. So better stay tuned tonight, watch the this fight, and then let's see how things goes. And also watch
I
the
mean,
RV because yeah, what do you say?
other than this, I think today itself we saw some other bad news as well. The Russia declaring on there's some increased tension on the war side for Russia. I think Putin
Oh,
actually
I
released
I,
a
I
new
didn't read that news.
video on it.
What's going on there?
I don't remember very clearly as well, but it's actually there's potential of increase in the war tension. Uh,
Between Russia and
I
Ukraine?
Yeah, correct.
I see.
So
Oh, um, really? Let's check it out, man. Ready to read today. Just came across here. No, no, not much news, but no, if things go worse, if things go worse again about between Russia and Ukraine, and then we're going equities market are going to get crashed, right? Get crashed again.
definitely,
But I would like to
but
raise some good news here because our DJ Kane, Michael Sater, after stepping down from MicroStrategy as he stepped down CEO, but he relentlessly purchases. He just keeps purchasing Bitcoin, and what a move! Despite the bear
yeah,
market and despite macro bearish environment, uh, this guy just don't doesn't stop purchasing Bitcoin. And here, MicroStrategy buys 301 more Bitcoins, now holds almost 130K. I think he already accumulates up to, let me just calculate. How many percent of total supply? 130,000. That's, wow, that's 6.5% because I deducted the 1 million Bitcoin from Satoshi Nakamoto because I suppose he won't spend it, right? So I take the total supply of 20 million instead of 21 million because I don't think Satoshi Nakamoto is going to spend that one 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 million Bitcoin, right? And
correct.
that's 130 Bitcoin as totaling 6.5% of total Bitcoin. Oh, what a move. Average price of 19K for that 300 Bitcoin, and now is now holding 130, 130, 130,000 Bitcoins. Totaling price of 3.98 billion, average price of 30K. That's, you know, he really has the conviction at this moment because everybody right now is down bad, portfolio all red, and also people are so bearish given that the macroeconomic environment is not very good, equities not performing well, and then we technically we are entering into a recession and things are looking so bad right now. However, MicroStrategy, this guy Michael Saylor just doesn't give up. He just
I
keeps
mean,
stacking coin.
he just doesn't care, Johnny. He just doesn't care. He just keep
Yeah,
he's our
I think he did an interview, and in the interview he mentioned that it doesn't matter what price you purchase. Ultimately, it comes down to the quantity, the number of bitcoins you hold. That's the thing he thinks that has the most importance to him.
Yeah, be careful,
Yeah.
Johnny. He's coming from your BTC. I mean he's the only public figure right now that is still accumulating. He's a very focused guy, I think, and
Yeah,
I
yeah.
think he's
He's actually very convicted.
yeah, and he's very essential for backholders like us, Johnny. And even Elon and Cathy Wood already given up on us and capitulated on us already. And I think if we were to look at the Bitcoin Treasury's website, um, only MicroStrategy now stands strong at the first place among many other like public listed companies. And as you calculate earlier, he's holding like about 6 point something percent of the total supply right now.
Yeah, yeah.
And I think
Minus Satoshi Nakamoto's 1 million Bitcoin. Yeah,
yeah.
yeah.
And I think he's already at the first place for
First
it.
place,
And
right?
I
Definitely.
think the others are like some other miners like Marathon Digital and also Riot Blockchain. But I mean, they only hold like a small amount as compared to this guy, man.
Yeah, yeah. What a move. Quite impressed. Does it mean that Bitcoin is going to outperform ETH if we just denominate ETH into Bitcoin? Historically, we could see that um in 2021, in May 2021, the price of ETH to Bitcoin, so 0.08302, and now it's 0.07. Do you think that's going to, what do you think about it? Do you think Bitcoin is going to outperform ETH later?
I mean, this is the legendary flippening, right? As people in the crypto say. Uh, I think in short term wise, maybe not that quick, but if Ethereum were to go through the other stages as we mentioned earlier, I think definitely there's a potential to it for Ethereum to start flip, but I wouldn't say it's very near term.
Yeah, you're right. You're right. One thing that still distinguish Bitcoin from ETH is that the mass supply of Bitcoin is not is has been fixed for a long time, and it actually has a significance. I mean, the image to crypto, and that's the thing that that gives people conviction and actually gives people confidence about holding Bitcoin because it has just one single utility, and that's the store of value, and that is supported by proof of work, which is safer. People would say. I also agree that proof of work is safer. Just don't think. I'm not thinking about what quantitative computing can do to hack the algorithm, the consensus of Bitcoin, but let's just consider this from a standpoint of a decentralization of nodes. We could actually, go to this thing, bit nodes, and we could see the distribution of the Bitcoin nodes. It's actually quite decentralized, right? Uh, yeah. This is a live map, and it shows the concentration of which both Bitcoin nodes found in countries around the world. So most of them, we can find them in America, US, and then we have somewhere in France, somewhere in France and Netherlands, and then Japan, Indonesia, Philippines, Hong Kong, and then United States, just a lot. What do you think about this? Right?
Yeah, it's definitely decentralized for BTC, but I think for now, BTC it's it's the OG, right? The OG of all coins.
Doji, yeah.
I think a lot of us got to into the industry, got to know about crypto. It's mainly towards BTC, so I think BTC will hold a place in our heart forever.
You're right. Yeah. And there are a lot of narrative, about Bitcoin. First, some narrative surrounds Bitcoin with the inflation hedge, but I don't think it's doing the inflation thing right now, the anti-inflation hedge thing right now, because it's not doing the inflation hedge utility, right? So some narrative about Bitcoin could be not very, just narrative. Narrative
Mm.
is not fact. It's just narrative, right? It's just sentiment.
Mm.
Yeah,
Yep. Narratives comes and go.
yeah, comes and go. Narrative comes and go. So yeah, and yeah, make sure. I think we're approaching the end of this section right now, and just a warm reminder. Uh, Tonight, we have the FOMC meeting, and then so make sure you stay tuned to the press conference, and also better protect yourself from the incoming volatility, because market is not it's not looking good later. And lastly, we have the candy drop event. So it's for Huobi app only. So make sure you guys trade to earn crystals and spend the crystals to join the candy drop event. And the tokens will be randomly distributed to registered participants and will be delivered within 12 hours. And we will give out an airdrop to 5 lucky stars. And make sure you check your SMS to receive the airdrop. And let's just sum it up, right? And I'm very happy to have Brian here. We had a very nice conversation, and yeah, really a funny and interesting chat with Brian. I think our audience
Thank you,
will
thank
enjoy
you,
the conversation over. Yeah, and
thank you,
yeah,
everyone.
thank you everyone for listening, and yes, I hopefully see you in the next episode. And yeah, we will continue to bring some interesting content for you guys, and just stay updated to what's happening in the space. And yeah, always thank you for listening, and see you next time. Peace.